This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Wall Street walloped. Stocks turn negative for the year as the dollar soars and investors grow concerned about when the Federal Reserve will make its next move.
Dollar drama, the fast and furious rise in the greenback is jarring markets across the globe, hitting energy and potentially pressuring profits of U.S. companies. We examine the consequences.
Game changer? Could HBO's new service potentially shake up the television industry as we know it? All that and more tonight on Nightly Business Report for Tuesday, March 10th.
Good evening, everyone, and welcome. Send your children to another room. Cover the ears of the impressionable. It was an X-rated day on Wall Street. In fact, call it 50 shades of ugly. And not just here in the U.S., but around the globe, the Dow Jones Industrial Average suffered a 332-point loss to close at 17,662. Its second worst day of the year. The gains of the year so far, gone. The NASDAQ off 82, the S&P 500 dropping 35. Those declines amounted to 1.7% or more. Big part of the problem today, the strengthening dollar, the greenback rising 1.1% to a 12-year high against the euro. And there's a powerful force driving the dollar's dramatic move, diverging central bank policy. As the U.S. economy strengthens, the Federal Reserve is expected to hike rates, possibly even as soon as June. Now, that pulls investment flows into the U.S. The European Central Bank going the other way, buying bonds, flooding the market with euros, thereby devaluing the currency to reduce borrowing costs and stimulate Europe's economy. That's the mechanism. And the dollar isn't just rallying against the euro. It's seeing strong gains against a handful of other major currencies, including the yen, the pound, the Swiss franc, and the Russian ruble. Bob Pisani now with a look at what this all means for investors like you, for stocks, and for corporate earnings.
The markets were obsessed with a stronger dollar today. The source of that concern is fairly obvious. The Fed unwinding their stimulus program is the main catalyst for the rally in the dollar. Now, the fear is that stocks could be next. The obsession isn't surprising with the dollar. Roughly 46% of the sales of U.S. corporations come from outside the United States. A strong dollar stifles overseas earnings growth. Now, we don't have really good numbers on the impact of a strong dollar on earnings because companies aren't required to report that. But enough have to indicate that the strong dollar is definitely an issue. For example, Abercrombie & Fitch said foreign currency impacted earnings negatively by 3% in the last quarter. Fastenal said a strong dollar lowered daily sales growth by 1%. And Gap said currency effects took 6% off of earnings. All told, about 20% of the companies in the S&P 500 said the stronger dollar negatively impacted profits in Q4. And this isn't over. Most believe the dollar's rally will continue. But let's not kid ourselves. The story that the dollar's rise is a disaster for U.S. companies is being wildly exaggerated. Lower rates, which we're seeing in Europe, are great for U.S. corporations. And there are other ways U.S. corporations can offset the effect of a higher dollar. For example, many companies are now issuing debt in euros instead of dollars, which dramatically lowers their borrowing costs. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And it wasn't just stocks that got knocked around today, so did oil. The price of West Texas Intermediate fell $1.71 to $48.29, and Brent crude also dropped. Jackie DeAngelis takes a look at the connection between the dollar and oil and what it could mean for prices.
Oil prices have fallen more than 50% in the last 12 months, down 20% in the last 3. While analysts, investors, and traders have all been talking about the supply-demand imbalance as the main culprit, there's another less obvious factor that can have a big impact on crude prices, and that's the dollar. Simply put, when the dollar strengthens, it pressures oil prices. That's because crude is priced in dollars. So when the dollar goes up, traders using other currencies to buy crude find it more expensive. Many traders are buying in, you guessed it, euros. The euro falling to a fresh 12-year low against the dollar. Traders expecting the euro to weaken to parity fairly soon.
Certainly, when you look at the price action today of crude oil and what the dollar did, as the dollar did get stronger, crude oil, the loss in prices was accelerated towards the afternoon.
And this isn't the first time the almighty dollar has impacted crude prices. In 2009, when crude dropped from more than $140 a barrel to the low 30s, the dollar strengthened significantly at the same time.
Back in 2009, we saw the U.S. dollar move considerably against the euro, and we're seeing that today again as the dollar strengthens, crude oil comes off. But if there is a pause in that strength and you see actually the euro start to strengthen, crude oil will rise again.
And the expectation is that the dollar won't quit. Many have been calling for the dollar index to cross 100 early this year. At 98 and change, we're not far away. And that means more pressure is likely for oil. For Nightly Business Report, I'm Jackie DeAngelis.
And Joe Duran joins us now to talk more about the dollar's impact on the equity markets and what it means for your portfolio. He's the CEO of United Capital Financial Advisors, a management firm with $13 billion in assets under management. Joe, welcome back. Good to have you with us. You know, it feels to me as though the strong dollar, or the rising dollar, is the excuse du jour, like bad weather was last year. But here's the question for you. You say that the progress of U.S. equities basically depends on two things. One is monetary policy. The other is corporate profits. How big an effect is the rising dollar really going to be on corporate profits? And will it be so great that it could truly kneecap this bull market?
No, I don't think that it will. It can have an impact. And as Bob Pisani said earlier, it really depends on how the company operates, because if they manufacture in dollars or sell in dollars, it has a very different impact. And most of these global companies are very accustomed to significant swings in currency. The biggest issue is the rate of change and how quickly it's happening, because it's very hard for a company to adapt if you have a very volatile environment. And so that earnings picture becomes very difficult to predict. And as we've seen, really a decline in earnings expectations already this quarter for most large S&P 500 companies. So it has an impact. It's noise. It typically washes out fairly quickly. And I'm not sure how long this lasts anyway. We're, I think, overbought on the dollar. I think it goes a little further. But I think what you'll see is just a general increase in volatility. We've been incredibly spoiled, obviously, for now almost 3 years without a 10% decline. And the market's looking for excuses to price out some of the risk that we've seen.
Generally speaking, if you take the dollar and put it aside from the equation, because we don't know how long this cycle is going to last of a strong dollar, are you positive on equities at this point? There are some who say that we've had a pretty decent run for the stock market and have yet to have a significant correction.
Yeah, look, it really depends on time perspective for most people. There's really no good alternative. And when you look at equities, Europe is just starting their cycle of easing. And what you're going to see, I think, is reduced volatility in Europe and higher equity prices in Europe. And that will increase the economy. I just happened to come back from London and Madrid just now, last week. I got back Saturday night. And here are the two things I saw. London very affected by the complete disappearance of the Russian tourist, who used to be a very big spend in that economy. And Spain very much suffering with dependency on euro, where local Spaniards can barely afford to eat in their own restaurants because they have a currency that is just unsupportable. Now, what you see typically in most of these places is that Europe is so far behind. They look like the US did 3 or 4 years ago. And it's going to be, I think, a long ride of economic stimulus in the European zone. And that's going to create a lot more money flowing around, which will make equities an attractive alternative. I still think because the US is far ahead, we're going to have higher volatility. But you should expect a lot of very strange noise in the currency markets.
We're tight on time. Joe, very quickly, of the major risks that you think U.S. equities face, the rising dollar, rising interest rates, or pick a third, which is the one that worries you the most? Very quickly.
I think I'm most worried about what happens with the emerging markets, because they are so dependent on the dollar, and with a lot of the basic materials falling as well, we're going to see some very ugly surprises in South America or Asia that could bubble up in many strange places. And that's an area very few people have been talking about.
Very interesting. We'll delve deeper on that at a future time. Joe, thank you very much. Joe Duran is with United Capital Financial Advisors.
And now to the job market, where the number of openings rose to a 14-year high. Employers across the country advertised 5 million jobs at the end of January. And according to the Labor Department, the number of people who quit also increased. And that's generally a sign of confidence in the economy.
You've no doubt heard it before. Drug prices are rising. Today, a new report from Express Scripts confirms that. Overall spending on prescriptions in the United States up 13% last year. That is the most since 2003. Meg Terrell now on what's behind the rise in drug prices and what's being done about it.
How fast are drug prices rising? Pharmacy benefits manager Express Scripts says the increases are setting records. Express Scripts negotiates drug prices on behalf of insurers. It says the gains were driven by a 31% increase in the cost of so-called specialty drugs, like those for rheumatoid arthritis, cancer, multiple sclerosis, and especially hepatitis C.
It's just not sustainable pricing. And so we have to do something to both bring the products to the marketplace, but also make it affordable for patients.
The drug price wars came to a head last year over Gilead Sciences' revolutionary new pills for hepatitis C. Its Sovaldi and Harvoni cost upwards of $80,000 for 12 weeks of treatment, drawing resistance from insurers and patient advocacy groups. When a new regimen from AbbVie was approved in December, Express Scripts struck an exclusive deal. Gilead then reached a similar agreement with competitor CVS, leading Gilead to forecast a 46% discount on its hepatitis C medicines this year. Its stock sank on the news. Express Scripts says it isn't finished. Next up may be a new class of drugs for cholesterol, expected to be approved later this year from Amgen, Sanofi, and Regeneron. CVS has estimated they could cost the healthcare system as much as $150 billion a year, a number the drug industry says is unrealistic.
That's wrong. I can tell you that it's not going to be $150 billion a year. And that's a little bit of, I would say, gamesmanship, because they're trying to obviously come and get the discussion going with a little bit of fear to the system that it's going to overwhelm the system. It's just not true. We're going to come out with a fair price.
Both Regeneron and Express Scripts say they're in discussions about price before the drugs, known as PCSK9 inhibitors, reach the market, which could lead to lower prices at the outset.
We got to get to the best price for our clients. We are having great conversations with Regeneron, Sanofi, Amgen, and so we would really like for the right price to be the price they bring it to the market at.
Express Scripts has also highlighted cancer as an area of focus, where multiple drugs working in similar ways are on or near the market. Some have called the tighter pricing environment a paradigm shift for the drug industry, and it's likely only to continue. For Nightly Business Report, I'm Meg Terrell.
Still ahead, the Snowden effect and why the fallout from the leaked classified documents is still being felt from Washington, D.C. to Silicon Valley. The nonprofit behind Wikipedia plans to file a lawsuit against the National Security Agency and the Department of Justice. The suit challenges the government's mass surveillance program that first came to light when Edward Snowden leaked documents revealing the reach of U.S. surveillance back in 2013. Eamon Javers has been very busy. He's been following this story and some others, and he joins us now from Washington. Good evening, Eamon.
Good evening, Sue. Well, this suit was announced this morning by an op-ed by Jimmy Wales. He's the founder of Wikipedia, and he's alleging here in the op-ed piece and in the lawsuit that NSA mass surveillance violates Wikipedia readers' Fourth and First Amendment rights, and he wants the NSA to knock it off, in effect, saying that people have a right to be able to talk and discuss and research controversial topics in countries around the world where those controversial political and ideological beliefs might not be as well protected as they are here in the United States. I talked to a senior administration official about this issue today, Sue, and I can tell you what they told us, which is they say we will not comment on any specific matter before the court, but we've been very clear about what constitutes a valid target of electronic surveillance. The act of innocuously updating or reading an online article would not cause someone to be subjected to electronic surveillance. So there, the senior administration official is suggesting that just by participating in Wikipedia and also by reading articles on Wikipedia, you're not necessarily going to become subject to NSA surveillance. Jimmy Wales, the founder of Wikipedia, though, obviously disagrees.
Disagrees with that, yeah. There was also another big Edward Snowden story related to it in the news today, but this one involves Apple. What happened?
That's right. The Intercept, which is a news organization founded by Glenn Greenwald, who first broke the Edward Snowden story, today reported that the CIA for years, and the U.S. intelligence community as well, has been trying to hack into Apple devices, including iPhones and iPads, including an annual gathering here in Northern Virginia called the Jamboree, where they allegedly traded notes among U.S. intelligence officials about how to get in to the source code behind the apps and other ways to crack into Apple devices. All of this allegedly about trying to figure out what targets are carrying around in their mobile devices. And I can tell you on this one, I asked a U.S. intelligence official for a reaction to this piece, and the U.S. intelligence official told me, look, this is what we do. It is what it is. The CIA exists to get information on adversaries overseas.
All right. Eamon Javers in Washington. Eamon, thank you.
You bet.
Sales slump in Barnes & Noble's most recent quarter, and that is where we begin tonight's market focus. The retailer saw earnings rise thanks to some cost cuts, but revenue fell as the company dealt with weakness in its Nook and retail segments. This comes ahead of the company's planned spin-off of its college books business and its Nook and eBooks business. Shares slipped 10% to $22.36. Target out with more details about its recently announced layoffs. The retailer says it's going to cut 1,700 jobs, close out about 1,400 open positions, according to a filing. This is part of a restructuring aimed at saving $2 billion in costs over the next couple of years. Shares off 1%. They closed at $77.67.
Investor cheers news today that Credit Suisse's chief executive is stepping down at the end of June. The company's CEO has led the Swiss bank since before the financial crisis. He will be succeeded by the chief of a British insurance company. Shares popped almost 7% to $25.11. The Food and Drug Administration has approved United Therapeutics drug for treating cancer in children. Specifically, the treatment is used for neuroblastoma, a rare form of cancer that often occurs in young children. The stock was 2% higher to $163.84.
And coming up, shaking up an industry. Could HBO's new service with Apple change the way we watch television and transform an industry? Apple's Tim Cook took the stage again today for the company's annual shareholder meeting, just one day after the big Apple Watch announcement. One of the questions shareholders asked today, if the company would buy the electric car maker Tesla. Tim Cook didn't quite answer that one. Reverend Jesse Jackson also urged Cook to improve diversity in Apple's leadership.
HBO is introducing a new service, and it doesn't involve a traditional cable television subscription. HBO Now will offer all of HBO's original programming as well as movies and be available exclusively on Apple devices when it debuts next month. But as Julia Boorstin explains, the move away from a classic cable bundle could be the start of big changes for the industry.
HBO Now, a new $15 monthly service making HBO available for the very first time without a cable subscription. It'll be available exclusively through Apple TV for 3 months starting in April.
This is a transformative moment for HBO, and we are so excited to introduce HBO Now to all of you today.
With this exclusive deal, HBO gets access to the massive Apple ecosystem, says Jeff Bewkes, CEO of Time Warner, HBO's parent.
We're excited and happy to work with Apple. They're so good. They're so energetic at marketing. They have such a strong position, as you all know, in global users.
This partnership is also a win for Apple, which will get a cut from monthly subscription fees and should benefit from HBO's big promotional push.
We love HBO. Over the years, they have created groundbreaking shows that have really become a part of our culture and helped shape our culture.
This deal could help sell more Apple TVs. The streaming content boxes Apple just slashed the price on by $30 to $69. HBO's first direct-to-consumer offering is momentous not just for Time Warner, but it's also a key test for the entire cable industry, whether it'll create new revenue from internet-only customers or prove an alternative to the traditional TV bundle and drive cord cutting. Morgan Stanley's Ben Swinburne predicts HBO Now will be a win for Time Warner, generating incremental business. But he says if other channels follow suit, that could drive cord cutting. For now, Time Warner and Apple see huge opportunity.
We both worry about change in distribution, and we salivate over change in distribution.
When Apple's exclusive expires in 3 months, we can expect other streaming services like Amazon and Roku to start selling HBO Now. The exclusive does not cover traditional TV providers, so HBO is in talks with all of them to sell the service. For Nightly Business Report, I'm Julia Borston in Los Angeles.
So what will all of this ultimately mean for the cable industry and how we watch television? Let's ask Jason Bazinet. He's media and entertainment analyst at Citi. Jason, welcome. Good to have you with us.
Thanks so much.
If more and more content providers like HBO, like ESPN, decide to go over the top of the cable companies and go direct to viewers in this kind of way through a broadband hookup, what does that do to the business model that the cable companies have thrived on for decades, which is basically the triple play?
Well, I would really say that the bigger risk is actually for the cable network companies themselves. The pay TV operators that you're alluding to can certainly raise broadband prices over time to recoup lost video profits. But what's clearly going on in the ecosystem for video delivery is it's changing rapidly. Let me just give you a few statistics to illustrate it. 33% of all internet traffic is now Netflix. Live TV ratings are down 10% year over year. And pay TV penetration rates peaked in 2011 at about 84% and have fallen about 2 percentage points over the last 3 years. So the consumer wants to go over the top, and they're changing their behaviors.
So how big do you think this HBO Now announcement is, and is it as transformative as certainly HBO thinks it is?
Well, I think it is. I mean, Netflix has around 35 million customers. They're charging at a retail level about $9. HBO exists, as your piece alluded to, inside the cable bundle, but as a consumer, the retail price for HBO today is around $15, and they also have around 35 million subs. So what it tells me is that at the consumer level, they ascribe twice as much utility to HBO's content as they do to Netflix's content. And as we said earlier, Netflix is quite big. So I think HBO, it's reasonable to assume, is going to be big.
So as you look at the business model of the large cable companies from whom we buy a television service, you would say that the revenue stream is going to change over, let's say, the next decade. They're going to charge more for broadband. Instead of $49 a month, it's going to be $89 a month. And they're going to rely a lot less on that package of television channels that you get.
Yeah, that's exactly right. I mean, the gross profit margins in the video product have been declining for some time. The content that they're paying for is rising about 10% a year. So if you just run the math out in terms of how much your video cable bill goes up each year, which is about 3 or 4%, there's not going to be any profits in the video business by the end of the next decade. So it's already sort of happening gradually beneath the surface. That's not really transparent. But this will just accelerate that transition where more profits will come from broadband.
Going to be fascinating to watch, Jason. Thank you very much, Jason Bazinet with Citi. And we should point out, of course, that the cable company Comcast owns CNBC, which produces Nightly Business Report.
And finally tonight, a look at what to watch tomorrow. Results from the Fed's stress test. The nation's biggest banks will be told whether they can go ahead with their planned dividends. Greece begins discussions with the IMF, the ECB, and the European Commission about the country's bailout program. And the burger chain Shake Shack is set to serve up its first earnings report since going public in January. And that is it for Nightly Business Report for tonight. I'm Sue Herrera, and we want to remind you once again that this is the time of year your public television station seeks your support.
And I'm Tyler Matheson. On behalf of your public TV station and all of us here at NBR, thank you for your support. We'll see you right back here tomorrow night.